A very good evening to all our mentorship traders. 7th of August 2020. It's a Friday evening. As usual, our evening session wherein we talk about the markets. We discuss the trades that you have done this week and what can we learn from these experiences. I also take this opportunity to welcome all our new joinees to our community. So starting off with the Nifty, we have a 4-day bounce back. If you recall last Friday, when we were discussing about the markets, we were looking at this particular day, which was last Tuesday. It was a breakout day. And the question mark was this a breakout failure? Well, it is, or it was a breakout failure, no doubt about it, because the very next 4 days was a complete sell-off and the index was down here. So this was a breakout failure, definitely. And what we have in these 4 days, the last 4 days, is essentially a bounce back or a consolidation of this 4-day fall, which essentially means that if we look at the last 8 days, the index essentially is where it was around 10, 13, 14 days back. So after a beautiful higher highs, higher low, kind of a beautiful trending move, the index is now facing a bit of, I would say, bit of volatility. If we notice the previous two sell-offs, this one and this one, in terms of the sheer size, this one is larger, definitely. The only one which we saw much more meaningful was down here in the month of early June. And the last two times we had a pretty healthy, strong bounce back to a new high. So far, the last 4 days bounce back is also behaving well. Whether we're going to go back to our previous high or further above or not, that needs to be seen, that needs to be observed. But we should not question the trend. The index has been finding very good support from our moving averages. And this time also it has managed. If you notice closely, everyone, we use a 13, 21, 34 average. Since June, when it tested the 34 as well as the 21, it had never dipped down to the middle moving average. This time it has come down to the mid average, which means that at every highs, traders are finding it far more luring to book profits, and the sell-offs are a little sharper or larger in size. Now the million-dollar question is, what's in store next week? Well, this is the weekly chart, and the index has created a pretty wide range for itself considering the sell-off and then the bounce back. These bounce backs are essentially signs of resilience or strength, which clearly suggests that this index is not in a mood to give up that easily, for sure. So in terms of levels or in terms of view, I would continue to stay, again, the same word, cautiously bullish. There are a couple of reasons why I continue to say so. Well, for this, as I always share the weekly performance of the sectors. So if I show you what happened this week, we can see that metals were the biggest gainers. But the reason what makes me a little cautious and the reason why I am being a little careful in the market for last couple of weeks is the small cap and the mid cap outperformance. If you see that both these Nifty small cap and the Nifty mid cap index has beautifully, comfortably taken out their July highs, both the mid cap as well as the small cap. In fact, if I open the Nifty chart, and if you look at the level, which is around 11,200, little above 11,200, and if I keep on going back, I can see that 11,200 was first touched by the index. I'm sorry. Yeah. So 11,200 was first touched by the index in this bounce back on the 21st of July. Okay. If I count, this would be little close to 3 weeks. Now, last 3 weeks, the index has essentially not gone anywhere. Close on close basis, it has done a lot of drama, but it's not gone anywhere. Now, what I'll do is I'll come to this report designer and I'll run a query, and I want to see how is the sectors played out in these last 3 weeks. Let's take a look. So this is the 3-week performance, the second column. And I can see very clearly the small cap index is up 8.5%. The mid cap index is up 5.5%, and the Nifty is little above 2.5%. So distinct and quite significant margin of performance coming in from both the mid and small caps. Now this is healthy. If you've been following our videos, you know that I've said when I first saw this that this is healthy. It gives me a signal that this market is now becoming a broad-based rally. Participants are willing to buy into non-index stocks also. That gives the confidence. It's good. But the momentum is really, really high in the small and mid caps, which is generally a sign of worry. When the index does not go anywhere and the small and mid caps are on a party, that generally, kind of gives me a sense of doubt that what's cooking here. And that's why I continue to be careful. And in terms of levels, of course, the previous high above close to that 11,300, 330, 350 mark. And on the downside, I would say that as I can clearly see an inside bar happening in today's range, today's trade, I would like to see whether the lows of Thursday, which is 11,120, that's going to act as a short-term support for the index. I had this red channel, if you can see this red channel. Now, I'm a little worried because the red channel has been broken. And generally, when supports are broken, it tends to act as resistance. It's behaving as resistance. So I'll be keeping a very close eye on the Nifty, that is on the Thursday's low. That can lead to some amount of follow-through weakness. This is a 75-minute time frame, the chart. And you can see that after this one-way nice sell-off, the index has bounced back and it's now consolidating. Going back to the sectors, looking at this week's performance, it's the metal. If you recall, we were talking that last week, we were talking that pharma and IT are stretched. Pharma and IT are stretched. So other sectors have to pitch in, something like FMCG. Well, FMCG did pitch in, no doubt about that. We did get a nice bounce back after this 2-week consolidation. And I think that this rally will continue further ahead. But the pharma did not slow down. In fact, the pharma did as good as the FMCG index. And from nowhere, it's the metals which actually gave a close to an 8% sectoral gain, which was phenomenal. Most of the stocks in the sectors played out really well. And so did the auto. Though I feel that the auto sector, the auto index is definitely stretched, but it's in this beautiful red channel that I've drawn using RSI. And it seems that it's in no more to come down and extend further up. So I think going forward, the IT sector, which led the move, is essentially consolidating, and it can continue to, because the way it has stretched itself, it's created an inside bar on the weekly. And some amount of interest may continue to come within the FMCG. Pharma, no doubt it is stretched. And I feel and I sense that it will stay volatile now. It will not give up that easily, but it will stay volatile. So my eyes will be on the FMCG and the banking and financial services, because that's more than 30% of the markets. That pocket, when we talk about private sector banks, bank Nifty, financial services, are on the verge of a pretty good bounce back. If I show you the chart of bank Nifty, it's been bouncing back from the supports pretty well, which is 21,000. Now it's far away from its July highs, and it's distinctly far away from its previous high, of course. So that's the kind of underperformance that the banks and the financial services have done. So all eyes on this, because if the index has to surprise us with a new high and further upside, then definitely I think this banking space has to pick up. It's not going to be easy, considering if we look into some macroeconomics into play, which as a technical trader I should not, but as an economics graduate I should, that considering the situation of the economy, the real economy, and considering the situation of the index, the Nifty index, there is a wide gap, like big inequality that's happening. And so in between this inequality lies the banks and the financial services who have lent their money or our money, and they're going to face a lot of bankruptcies or NPAs for sure. And that's the main reason I think that this sector is looked more as a trading bet, 5-day gain, 6-day sell-off, 3-day gain, 3-day sell-off kind of a move. It's more speculation that's happening in banking rather than solid investment. Nevertheless, going forward the next week, I'll be focusing on FMCG and banking and financial services from a trading perspective. I feel IT will continue to slow down alongside metals. Never know. The market, tends to prove us wrong as many number of times as it proves us right. So let's keep our bias, or let's not keep any strong bias and stay cautiously bullish in the overall market. But that's it for me this week in terms of the indices. We'll move forward and take up your doubts and questions.